Okay, I think this is working. We got a new program going and set up here for us. So I hope it is happening and working, and you can hear me and you can see me. You can see the screen and everything is all good. So even though we've kind of changed just a little bit, and I'm just going to do a quick take on the market, I'm here for your questions. So if you ever do have a question, post it in the chat and I will do my best to answer that question. And remember, you can help us out by going to tickertimenews.com/strategy, where you get benefits as well. So make sure you check that out. So let's just get into it. But remember, even though I'm just doing a quick retake on the market and then uploading videos separately, it seems to work out better for you and for us here too. I'm always here for your questions. Leave them in the comments of this video, of any video, and we're always watching, and I'll do my best. I know I've got Mosaic coming up. I'm going to dig into that company and see what I can find. That stock has been going up. If we look at the ticker symbol, MOS for Mosaic. They do a lot of fertilizers, potash, and a lot of that is very, very useful for agriculture, farming, and the yield of crops. So, people might be wondering, well, why do we need these fertilizers on these crops? Well, if you have a corn stock that produces 5 ears of corn, well, then that's 5 people you're going to feed for 1 meal. But if you can increase that yield to 10 ears per stock, then you're now feeding twice the amount of people. 10 people can have an ear of corn for dinner. So these are very important for our civilization and way of life here. So I'm going to dig into Mosaic. Haven't started yet, but this is a question that was asked. So I'm going to dig into this ticker symbol and look for that video coming up. So you can always ask a question, whether it's a live video or not, okay? Just so you know. All right, here's the S&P 500 for the day. Pull volume back up there. All we did was move sideways today, right on this line, this purple line. It's a great area of support right now. However, earnings could change that, and I'll mention that in just a moment. So here we go. Let's get started. Welcome back, investors, to Ticker Time News. I am Adam. Thank you for joining me today. I greatly appreciate it. And the S&P 500 today, it declined 0.3%. You can look over here on the right-hand side. 4488 is where the S&P 500 settled for the close today. It closed 4506 yesterday, I believe, or 4500 even. 0.2 is where it closed yesterday. So a few points below it, but still, we're just moving sideways right along this purple line here. And I'd expect that to continue bouncing around in this space right here, possibly dipping below this due to earnings. Earnings could bring us down slightly, and I'll talk about that in a moment. So yeah, the S&P 500 was down 0.3% on a Friday in a very mixed session, which value stocks totally outperformed, and at the expense of growth stocks, of course. The growth value divide today was evident in the disparity by the Nasdaq dropping 1.3% and the Dow climbing 0.4%. Then you've got the Russell 2000, which lost 0.8%. Now, growth stocks remained pressured by valuation concerns. Even though valuations have been cut, we had this snapback rally that brought valuations back up, right? Not back up to their all-time highs for some companies. Some companies are hitting all-time highs right now. But most of the growth companies are not back to all-time highs, but their valuations have expanded some from the big dip on March the 14th when we snapped back from that low, right? As long-term interest rates, they continue to creep higher. Now, the 10-year yield, and we can look at that going to US10Y, the 10-year rose 5 basis points to 2.71%. You can see it right here on the right side of the screen, 2.706. I rounded that up to 2.71. This is going to 3%, folks, okay? Just so you know, so you're clear. This is going to 3%. And if we look on the chart here, if we bring this together, this is still the daily view, okay? The last time we were up above 3%, we have to go back to about December of 2018. December of 2018, we were at and above 3% for the 10-year, all right? Now, over the past week, just this week alone, the 10-year is up 34 basis points. It has been moving quickly. And again, it's going to 3%. There's nothing to stop it. It had to filly around at the 2% level for a while because there was resistance there. But now that it's broke it, it's going. It's gone. It's on a run right now, and it's going to continue to run. Now, the shorter date, which is the 2-year yield, also pushed higher. And we can go look at that by typing in US. We got to do 0.2 and then the Y for yield. And that gives us our 2-year yield. Now, it increased 5 basis points to 2.52%. You can see it there on the chart. It didn't explode like the 10-year did this week, but it's seen its own rally, and it's kind of softened a little bit here. You can see a little bit of a curve, a little bit of an arch starting to occur right here. Could it flatten a little bit at this point? Maybe. I don't expect it to. I think it's going to go a little bit higher. It was up 10 basis points on the week, so you can see a big difference between the 10-year and the 2-year this week. 10-year up 34 points on the week. The 2-year up 10 basis points on the week. Now, mega caps within the S&P 500 sectors, information technology down 1.4%. Consumer discretionary down 1%, and communication services down 0.7% today. They were the sectors weighing most on the market. Now, we can look at the Vanguard Mega Cap Growth ETF. The ticker symbol is MGK. All right, that's what this ETF is. Mega Cap Growth. It fell 1.2% today. Now, also pulling the market down, the transportation stocks, they also struggled. They had their own underlying growth concerns and negative-minded analyst recommendations. Bank of America actually downgraded Union Pacific, ticker symbol UNP for Union Pacific. This is a railway, right? So you've got freight here being shipped around. If the economy is slowing, you're going to see that in transportation first, right? That's one reason why Bank of America jumped the shark, I think, a little bit too quickly on this one in downgrading Union Pacific, and it was down 1.18%, rounded up 1.2% today. UPS was also downgraded by Bank of America. And UPS is their ticker symbol. UPS also carrying freight in the transportation sector. It was down 0.9% today. So Bank of America downgraded railroad and truck freight delivery because they believe the economy is going to slow down. And I've been saying this for months now, that the economy is and will continue to slow down. The pace that it's slowing down is only going to accelerate. As we start to get earnings, starting just next week, we get the banks next week. I don't think we're going to hear much out of the banks, to be specific. But after the banks report, maybe not next week, week after, when we start really getting into it, you're going to start hearing guidance from these companies. They're going to be softer, right? They're not going to be as optimistic. about growth going forward. The second half of this year is going to slow heavily, and that's going to affect transportation. And that's why Bank of America downgraded Union Pacific and UPS today. And they did downgrade them to neutral from buy. All right. Also of note, the Dow Jones transportation average fell 0.9%. When you have transportation falling, it's also a leading indicator of a potential recession. I know, recession. There are a lot of red flags right now pointing to a recession. And transportation's falling. I mean, look at how far UPS has fallen just over the past week. It was at a high of, what would this high be? $223 on March the 29th. It's April the 8th, and it's down to $190. So it's now sub 200. Take these Bollinger Bands off the chart, and you can see it is sub its 200-day moving average. It is well below its 50-day moving average, and even its 21-day moving average is way up here. And another thing of note, there was an area of support. UPS on the stock chart, they hit it yesterday. They hit that support. It's right around $190. And today it kind of hung on to it, right? Like it's hanging on to this bar, $190. That's where support has been. There's been a lot of reactions back here in September of 2021 and August of 2021. Lots of reactions. There was a gap up to that area of April in 2021. So lots of reactions at 190. But if transportation keeps falling, then UPS is most likely headed back for this trading area here where these two black lines are going diagonally across the screen. That's the trading channel that UPS was once in a long time ago. Going back here, I guess it fell out of it in 2018. 2018, back when the 10-year was above 3%. Okay, I find it interesting. Everything's connected, and I just find it's so interesting, right? But this is where UPS is headed, and that's $170 a share. I know that's a big call, especially with their earnings about 18 days out from where we are right now. But $170 a share would put it back into its trading channel that it had been in for a long time. The pandemic boosted it way above its trading channel. And now that the economy is slowing down, it's coming back down too. And it's going to fall into that trading channel. You just wait and see. $170 is the ceiling for that trading channel. The bottom of that trading channel, right around earnings, would be about $150 a share. So it's got some room to fall, and it's going to. Okay, just a prediction there for UPS. But then again, just remember, earnings are coming up, and they could potentially still be busy and show it in their earnings for that day. Because remember, earnings are what happened in the past. Guidance is what's going on in the future. And the stock market is a reflection of what's happening in the future. So their earnings may be good, but their guidance will be softening. Okay? Just keep that in mind as we get into earnings starting next week with financials. And speaking of financials, they were up 1% today. Along with energy being up 2.8%, they were the strongest performers in the S&P 500 sector breakdown. And of course, that happened amid higher rates and higher oil prices. Oil rose 2% to $98.18 a barrel. Now, the defensive-oriented healthcare, that was up 0.6%. Consumer staples, up 0.4%. Utilities, up 0.3%. And real estate also up 0.3%. Those were the sectors that added, I guess I would say they added to their weekly gains. Those are your defensive sectors. And again, those defensive sectors, that's where people are going to be running to. Healthcare, consumer staples, utilities, and real estate. Those are your 4 defensive sectors. And you can either go with a sector ETF, or you can go with a more individualized stock, a particular company within that sector that you like. That's fine. That's fine. You can invest your money how you want to. That's what we're all here to do. Okay, moving on. Now, blue chips like United Healthcare, ticker symbol is UNH. They were up 1.7% today, right? Big blue chip. This whole week, they have been rising, up 1.68% to be precise, flat and after hours. They have earnings in 6 days. Next week, they have earnings. Now, they had a symmetrical triangle here inside of their trading channel. They broke out of that, and now they've broken out of this trading channel that they had been in for a while. Now, with earnings coming up, this is getting pretty steep and stretched out for United Health. And if you look at the RSI down here, this is also getting up there. It's at a 73.3. Remember, 80 and above, that would be overbought. And then you got 30 and below oversold. And then you look at the money flows here. Money flows are at a 58.9. So it does have a little more room that it could actually go to the upside. But new all-time high today, $548.97. And then you have another blue chip, Walmart. Ticker symbol is WMT. Also hitting an look at Walmart. My goodness, it has been on a run. Look at this. Since the bottom here on March the 23rd for Walmart, it has just been boom. You want to talk about someone going to the moon, at least on the stock chart. The moves are they're not big, right? Today it was up 0.5%. Yesterday it was up 1%. Day before that was a really big day for Walmart because they were up 2.32%. But I mean, look at this. It's got a market cap of $433 billion. So for a company like that, to move 2.3% is a pretty big deal. Now, I know Tesla does that all the time, but this isn't Tesla. This is Walmart. We're also getting a buy signal on the money flow index right here. It is completely overdone. It's actually in overbought territory at an 82.2. So this rocket ship's going to come back down. I had this one listed a while ago, and I had a $152 price target. That's why there's this red line up here. But yeah, it totally broke that. Definitely broke that. I would be taking my profits on Walmart right now. I definitely wouldn't be jumping in on this one because that's extended. If we go to the weekly view, look at that on the weekly view. The RSI is at a 46, so it could have a little more room to go, but it is also sitting in all-time high territory, and don't know if that's where you'd want to be getting in at. So yeah, this one needs to cool down. And then another big blue chip that's a Dow stock, Coca-Cola, right? Ticker symbol is KO. Coca-Cola was up today, I think about 0.6%. Also set a new all-time high, not just a 52-week high. All three of these companies, United Health, Walmart, Coca-Cola, they're all big blue chip companies in the Dow Jones, and they all set new all-time highs. That's impressive. I mean, look at the run Coca-Cola's been on. Now, it doesn't move with big percentages, but this is a constant move. It hit its bottom on March the 10th. So a little bit before the March 14th, where a lot of other companies hit their bottom. That is an impressive move. RSI is at a 70.8, so it's not as bad as Walmart. Money flows at 71.4, so it's getting there, but it's not quite there yet. It also broke through my price target. I can't believe how far here. My price target was at $61.50. It's at 63.8 right now. Again, all-time highs contributing to the outperformance of the Dow today. And on no specific news. But United Health, like I said, it will be one of the first companies reporting their Q1 earnings next week. Now, back to the S&P 500 for a real quick second, and then I'm almost done. The S&P 500 right now, on the chart, it wavered right around its 200-day moving average. And that 200-day moving average is at 44.93 right now. The entire session, it just hung on, I should say, to that bar, not letting go. The entire session. Ultimately, though, it was closing below that 200-day moving average, and that's a very key technical level. If we look at the 5-minute chart for the S&P 500, we can see that we reached our high for the S&P 500 right around lunchtime Eastern, 12:30-ish, 12:25 to 12:30 Eastern time, and then it was downhill from there, bigger selling into the close. So this is the second session in a row that we had strong selling into the close. And again, on the daily chart, it closed below in that very key technical area, that 200-day moving average. Now, there wasn't a whole lot of selling pressure today, except into the close, as we saw. Now, Friday's economic data was limited to wholesale inventories, which increased 2.5% month over month in February, following a revised 1.1% increase in January. Now, there is no data scheduled for Monday, so it'll be a clean day, no economic data to shake the foundations of the market. Okay, watch out for videos about Carnival Cruise Line's record-breaking bookings, and it was a company history. They have a ton of pent-up demand. Also, what did Warren Buffett see in HP? Video coming out on that one as well. And then the third video coming up is CrowdStrike, boosting its annual recurring revenue with a very new partnership that is fascinating. All three of those videos are coming out this weekend. I hope you enjoy all three. If you could help us out by smashing that like button, sharing this video, and beat the market with us. Click the first link in the description to get benefits as well as you beat the market with us. So I hope you enjoyed today's video. I most certainly did. And thank you so very much for watching. And I'll see you in the next video.